Good evening, everyone, and thank you so much for coming. I'm Diane Hoffman. I'm on the faculty here at the law school, and I direct the Law and Healthcare program. So tonight, we are going to be hearing from these four panelists on our topic of the Affordable Care Act, Too Big to Fail. And the program is sponsored by the Law and Healthcare program, which is, I think most of you know what that is, so I don't need to go into that. And tonight's program is supported also by the Karen Rothenberg and Jeffrey Seltzer Law and Healthcare Program Fund, and I'd like to recognize and thank Professor Rothenberg for her support of the program, and I think she's coming, but she's just not here yet. So the motivation for tonight's program was the upcoming election, although perhaps overshadowed by a few other issues. The Affordable Care Act has remained, or is one of the major issues that the presidential candidates have very different views of, as we know. And there continues to be talk about expansion and improvement, modification, and even repeal of Obamacare in this electoral season. One of the things we want to do is to look at how good has the Affordable Care Act been for the population of our country and for different constituencies. So we think it's a little bit of a time for assessment, and so we're going to hear from our different panelists who come at this issue, I think from different perspectives and from different constituencies. So I hope you all have a copy of the program, and so I'm going to just briefly introduce them. So on my far right is Leonardo Coelho, who is with the National Health Law Program in Washington, D.C., which advocates and litigates for low-income and underserved individuals in terms of their access to health care. And he's their Director of Health Policy. He currently focuses most of his work on dual eligibility for Medicare and Medicaid beneficiaries, as well as Medicaid expansion, implementation, design of Medicaid expansion, and exchange benefit packages. He also serves on the board of the directors for the National Quality Forum. Next to her is Beth Melito, who is the Senior Executive Counsel with the National Federation of Independent Businesses. And she graduated from the University of Maryland Law School and was a notes and comments editor for the Maryland Law Review. She is at an FIB. She's responsible for managing the group's litigation and amicus work and is a frequent media spokesperson on employment and labor matters. Then to my left is Kimberly Robinson, who is a member of Funk & Bolton, PA, resident in the firm's Baltimore office. And she leads the firm's government relations practice group and is a member of the firm's insurance regulation practice group, where she represents a variety of insurer and business interests before the Maryland General Assembly and serves as the executive director of the League of Life and Health Insurers of Maryland. And she is also a graduate of the University of Maryland School of Law. And then last but not least, to my far left is Beth Samus, who she has a long history of work in Maryland, representing, well, I guess, understanding health insurers, working with them. She also serves as the acting insurance commissioner of Maryland, where she represented Maryland at the National Association of Insurance Commissioners. She has worked to advance healthcare reform in the state, implementing policies to give all small employers access to comprehensive health insurance benefits and consumers information about health maintenance organizations in the 1990s, and implementing the initial insurance reforms of the Affordable Care Act while at the Maryland Insurance Administration. So we're going to run this tonight a little bit as a more interactive kind of panel where I'm going to moderate and ask the panelists questions. So because we're at a university setting, I thought I'd start out by asking them what grade they would give the Affordable Care Act to date from their professional lens and why. So just for now, we'll go in this order and then we'll mix it up a little bit. Sure. And maybe you could say a little bit more about your work and what you do before you start out and just launch into your grade.
Great. So I'm the Director of Health Policy for the National Health Law Program. We basically do three things. We litigate, we do federal policy work, and then we support state advocates, all with the end of improving access to care, improving the quality of care for low-income people. So my sort of bullseye is the Medicaid program, but we do work in Medicare, the Children's Health Insurance Program, and for the lower-income populations in the exchange. My role is mostly on the federal policy side, so I'm interacting with HHS, trying to get them to issue better rules on how these programs work. I don't know how many straight up A's you give out, so I'm going to go with A minus, assuming that A is a really tough grade. I would give it an A minus, and the reason I would do that is not a big secret, right? It's the coverage impact of the Affordable Care Act. In 2010, we had 49 million people who were uninsured. Since then, the population has, of course, grown, but we only have 27 million people who are uninsured. So somewhere around 21, 22 million people got covered. So if you took 100 people in 2010 who were uninsured, 43 of them have insurance today. That was one of the major goals of the Affordable Care Act, and that has happened. The insurance rate at that time was above 16%. It is now below 9%. In the year 2016, the insurance rate went below, uninsurance rate, sorry, went below 9% for the first time in US history. So I think that the change is historic, and I do think it's really, really significant. The other piece of it that's really important to the populations I work for is are the insurance market protections, right? So the pre-existing condition protection, no discrimination against women, the essential health benefits package, which is the package of benefits that is required in general on the exchange, right? It's the first time that there's sort of been a defined benefits package, including things like a robust preventive services benefit. Really important pieces there. I think you all know about the provision allowing people to stay on their parents' insurance plans until age 26 has also resulted in many young people having insurance, which is important for a lot of reasons. There are also challenges, right?
Okay, we'll get to them.
Oh, okay.
And you get A minus, right? You're going to stand by that. Okay.
Yeah.
All right, let's go with Kimberly. You want to say a little bit more about yourself and then what grade you're going to give the Affordable Care?
Sure.
Oh, I'm sorry, Beth. I'm sorry, Beth.
Okay. I don't know if you were going to.
I can see you.
We can go this?
Yeah, we're going to go this way.
Okay.
Yeah.
Okay. So, thank you all for coming out this evening. It's nice to be back here at Maryland. I have been with NFIB since 2004. I was with the Department of Veterans Affairs, and I worked a lot at the hospital actually across the street before that. So since 2004, I have focused on labor, employment, a little bit of health, and I did have the pleasure then of working in NFIB when we had our landmark case, NFIB versus Sebelius, although, Leo, I will tell you, we did not take a position in the Florida versus Sebelius. So we did not file a brief. We were not part of that with regard to the Medicaid. So just so you know.
We were on the opposite
you may just
sides
like
of
some of the other things. Yes, exactly. But that was one. We did not take a position on that. I guess, you know, NFIB, we represent 325,000 small and independent businesses throughout the country. And the only criteria to belong to NFIB is that you be independently owned and operated, so not publicly traded. That said, NFIB represents the small of the small. So our constituency is unique when it comes to the, you know, the whole group of employers, if you will. 90% of NFIB members have 20 employees or fewer. And the vast majority of our members actually have 10 or fewer employees. So it's the smalls. I mean, it's the dry cleaner, the diner, you know, the flower shop. Those are our members. Since, undeniably, I mean, the Affordable Care Act has dramatically expanded insurance coverage. I think since the rollout of the act in 2013, you've had over 10 million who have gained coverage through either the state or the federal exchanges. And additional, there's been the Medicaid, Medicaid expansion, CHIP too. But for small business owners with whom I talk, The Massive Health Care Act has really been a mixed bag, and that's why I would give it a D+. And some people would say to me, who know NFIB and our position, you know, in the lawsuit, certainly would say, well, why not an F? Well, a D+ because undeniably coverage has been expanded. But that said, members still come to me all the time and say, where is the affordable in the Affordable Care Act? Health care insurance, the #1 reason why business owners do not offer health care insurance is because they can't afford to. It's that simple. Small business owners rank the cost of health insurance as their most severe problem in operating their businesses, and that was just in our recently released Problems and Priorities, which we release every 4 years. It has been the #1 problem and priority for NFIB members for the past 30 years. 56% of small business owners find it a critical problem. And as I said, the high cost of health insurance is the main reason employers do not offer it. And for those that are offering, Leah and I were talking about this too, many owners annually confront, you know, an arduous task of deciding what plan, was my plan dropped, the rates went up. I just read this morning that there was a carrier in Virginia that has applied for a 90% increase for 2017. So costs continue to go up, continue to, you know, make it really unaffordable for small business owners. And I think that, you know, there's a lot of work that still needs to be done. Whether future administrations or Congresses decide to dismantle or repeal the Affordable Care Act, or as Professor Hoffman said, improve, modify, reform, they still must confront the unique challenges of getting healthcare spending under control. Because too often, I think, health insurance and health care, those terms are used interchangeably. They're not the same. So as long as we continue to spend so much on health care, the insurance is going to be more expensive. It's just like a car claim. You make multiple claims on your car, the insurance is going to be more expensive. That's just the way it works. So no insurance program is affordable as long as health care cost increases consistently exceed the gross domestic product in this country. And right now we're spending about 18% of our GDP on health care, not health insurance, but on health care. So D+.
All right, okay. A- D+, all right. Now, Kimberly, go ahead and say a little bit more about what you do in your grade.
Sure. So good evening, everyone. Again, I'm Kimberly Robinson. I'm a member at the law firm of Funk & Bolton, and as Diane shared, I am the executive director for the League of Life and Health Insurers of Maryland, which is the state's trade association for the life and health insurance industry. And specifically on the health side, our membership includes all of the carriers who are writing in Maryland's individual and small group health insurance market. So we only have 6 groups of companies. They may have multiple subsidiaries, but 6 groups of health insurers who are writing in those markets. I am a graduate of the University of Maryland School of Law, class of 1998, and not terribly long after leaving the University of Maryland, I joined the Maryland Insurance Administration as a staff attorney. So I've largely done transactional insurance regulatory work prior to moving into government relations. I currently do both government relations and still continue to participate in the insurance regulatory practice. So never a litigator, but a lot of transactional policy and contract work, all in the area of insurance. And I started with the department in the life and health insurance section, so I've been with that line of insurance the longest. In terms of what grade I would give the ACA, it's an interesting mix of the 2 competing viewpoints that you heard from the table to my right, in that speaking from an industry perspective, not just for my league members, but from a broader industry perspective, including both commercial insurance and Medicaid. I also represent a Medicaid MCO and work with the America's Health Insurance Plans, which is the national trade association, doing both commercial insurance and Medicaid. I think I would give the ACA a B-. And for this reason: 1, I do think it can't be overlooked the fact that it has, in fact, expanded coverage, both in the insured market, but very critically in the Medicaid space. Medicaid MCOs, who are part of the private world, but providing coverage for those in the lower income stratosphere through the Medicaid program have certainly seen a tremendous uptick in enrollment, and certainly that's a space where a lot of those in the country who've been uninsured happen to reside because affordability was one of the barriers. So that Medicaid expansion that raised the threshold brought people into that market space. On the commercial side, the availability of tax subsidies for individuals who come in through the marketplace, through the exchange, Maryland having its own state-based exchange, but nationally through healthcare.gov and the federal exchange, those subsidies also brought that next layer of individuals for whom health insurance had been unaffordable without that subsidy support into the market space. And so it's the individuals who were most often going to fall in that uninsured space. So we are at a historic low when it comes to the rate of uninsured. But the one thing that the ACA was unable to do as it passed was to focus more directly on cost and the cost drivers. It is, in large part, a health insurance reform law, and there are a lot of moving pieces in the healthcare space that impact costs, and ultimately costs inform premium. Premium are what we all pay. So when we feel that, often if we've got a runaway cost or someplace where that cost pressure is growing faster than we can manage financially, it's going to show up in your premium. And so I think that there's a conversation to be had around what drives costs besides just insurance. The ACA, put in things like the medical loss ratio in an attempt to curb how insurers are doing their rates, increasing the pressure on rate review in states and things of that nature. But the fact that costs continue to go up are something that's being felt even in those market spaces that aren't as directly impacted by the ACA. And I have a feeling we'll probably talk a little bit more about its details. So I won't speak to that, but I'll say a B- for now.
Okay. And then last, Beth Samus.
Is it on? It's on. Yeah. My name is Beth Samus. I think I'm probably the only non-attorney here. I have a PhD in sociology, and I got started in health insurance policy back before you were probably all born, or at least some of you. I came to Maryland in 1985 and started working in the General Assembly, and that is where I got introduced to the idea of insurance. I didn't even know what insurance was before that point, I'm sorry to say. I've had a varied extensive career between largely bifurcated between the private health insurance industry and the state regulatory system, and even did a stint with the Treasury regulating property and casualty insurers. I currently am teaching introductory sociology as an adjunct at the Anne Arundel Community College, and I proudly serve on the board of Consumer Health First, which is a statewide consumer organization that advocates for continued access to affordable quality coverage for all consumers in Maryland. So when I saw the question about what grade would I give it, for those of you who teach, maybe this will make sense to you. I thought, everybody now has a rubric. So what is the rubric that I would use for the Affordable Care Act? And so I developed four parts to the rubric, just like I do for all of my introductory students. And I will tell you that my students think I'm a very hard grader. I think life is hard, so I think there's no reason not to get started on learning how to deal with difficulties in one's life. So here is my rubric. The first is access to comprehensive commercial health insurance coverage, and that is clearly an A. We've already heard from everybody else about all of the health insurance reforms that went into place in terms of eliminating the requirement that you could be turned down for coverage because you had what's known as a pre-existing health condition, which could be something as simple as being overweight, or that you happen to have met the lifetime maximum in your policy if you'd been insured with a health insurance company and weren't smart enough to buy an HMO which didn't have lifetime maximums. So those have all been eliminated, and that is clearly a straight A in my opinion. The second is uniformity and transparency. And there, again, I would give the Affordable Care Act an A. And what do I mean by uniformity and transparency? Well, one of the things that we have as a peculiar part of our political culture is the difference between the deference to state regulation and to state policy making. And that has led to enormous variations across the country historically in terms of what was covered under a health insurance policy and how states approached the regulation of the health insurance industry. For the first time, really, the ACA establishes a uniform set of criteria, both on the benefits side and on the regulatory side, and provides for the first time a way to improve transparency through the exchanges. And so I think that is enormous progress. Still think work to be done, but nonetheless a big advance. The third area, the third part of the rubric, is shared responsibility. And for that, I would give the Affordable Care Act a B, not so much for the act itself, but for the but because of the actions of the Supreme Court, which basically allowed the states to opt out of the Medicaid expansions. And so what do I mean by shared responsibility? Shared in the insurance business, there's this notion of actuarial fairness, that people should pay a price for their coverage based on the risk that they, the risk pool that they should be a part of. And in health insurance, that meant that if you were sick, you should be in a risk pool with other sick people, and people who are well should be in a risk pool with people who are well. And this act eliminates that risk segmentation. We still have some risk segmentation, but not nearly the degree to which it once was. And of course, the ACA itself categorically, for the first time, qualified all poor people for health insurance coverage. So a B, because the Supreme Court did not allow that provision of the Affordable Care Act to go forward on a consistent basis across the country. And the final part of the rubric is affordability. It's hard not to think about affordability when you ask everyone in America to buy health insurance coverage. And of course, what people mean by affordability is varied. And as you've heard, small businesses have seen affordability as being a problem for 30 years. I would say that in the individual market, people have seen affordability as a problem since the end of community rating and the monopoly of the Blue Cross Blue Shield plans ended in 1960. So that's a long time in which affordability has been a problem for us. Not too surprising that the Affordable Care Act hasn't yet solved the affordability problem. But it does, one of the things when everyone talks about its length, how big it is and how voluminous it is, one of the reasons why the Affordable Care Act is so voluminous is not because of the insurance reforms and what we talk about typically, but because of the provisions that the Act includes to allow the Department of Health and Human Services to engage in innovative programs in the Medicare arena to actually experiment with programs and policies that will drive healthcare costs down, that will change the way in which we pay for and evaluate healthcare services. For those of you who are involved in the healthcare profession, those parts of the Affordable Care Act will have more impact on your professional life than the coverage provisions had. So I think the jury is still out as to whether or not those policies will have the intended consequence. It's still too early to tell, but in my mind, given where we are today, there's the promise of an A in affordability, but for the moment, I would say it's a B. And so overall, giving equal weight to all parts of the rubric, that leaves me giving the Affordable Care Act a B+. Of course, if the Affordable Care Act was being graded in Maryland, we don't give pluses and minuses, so that would mean it would have to either be raised up to an A or lowered to a B.
And I was just going to add that maybe in the law school, if for your last item on the rubric for affordability, we might give it an incomplete.
Yes, we could do that.
Pun deleted. So, okay, well, thank you very much. So we have quite a spectrum in terms of how we would grade the Affordable Care Act. Now, kind of consistent with our title for this program, I wanted to ask each of the panelists, which components do they see of the ACA that are now too big to fail and will survive in the foreseeable future, no matter who wins the election and why? And maybe this time I'll start with Kimberly.
No matter who wins. So just going back to the title of the presentation, you know, ACA, is it too big to fail? I think my answer to that question would be yes. I think fundamentally, speaking for my industry and my partners at AHIP who've worked on this at the federal level, the one thing we've never had a conversation about was supporting a movement to repeal the ACA. I think at this point it has been a seismic shift in how we are dealing with health policy. I think Beth did a great job in talking about, particularly under her rubric, when we got to transparency and uniformity, the way that that really has fundamentally shifted the way we're dealing with insurance across the country. And so, you know, for those reasons, there's a lot that would be lost if you were to truly undo the ACA. The market reforms, which I think everyone on the panel referred to, keeping your kids on your policy till 26, pre-existing conditions, other forms of discrimination, all of those market reforms are things that whether, I feel like I'm about to quote the president, so let me make sure I give credit where credit is due. I don't know if anybody else heard him, but the president spoke on the ACA this afternoon in South Florida. So I happened to listen to his presentation on my way over here. And one of the comments he made was there's a lot of people who maybe don't even appreciate those things that the ACA has provided in their lives and in their interaction with their coverage. And I think if there were to ever be a rollback of those at a national level, people would in fact feel them, and that would be a problem for any commander-in-chief who pushed forward that policy. It doesn't mean that it's not without challenges, however, and so I think it's more a question of what are the reforms that ought to take place to try to mitigate those pain points that still continue to exist in our health policy across the country, and I think there are a number of those. Right now, cost is...
Are you going to talk about challenges?
I can hold challenges.
Yeah, why don't you hold challenges?
We'll hold challenges.
Okay.
Okay.
All right, so you're recapping, you're saying in terms of too big to fail, you're kind of saying that you think it's, for the most part, it needs to stay intact.
I think that, and I think the thing that's very different, spending most of my life working in state legislative affairs versus federal affairs, so much of what the ACA is in terms of the statute, in terms of the law itself, is the framework, and really the policy and the underpinnings are what come through HHS and CMS and CMMI, who are doing the cost reforms and things of that nature. And there are policies that can be affected that don't have anything to do with repeal, but are policies that the federal government are putting forward through agency work that could stand to be reformed, and we'll come back to that under challenges. But I think fundamentally, I don't know that I think that my industry would advocate for actual wholesale repeal of the law. There may be pieces, and I'll talk about what some of the specifics are in challenges, but not necessarily repeal.
Okay. All right. Beth.
Okay.
Melita.
Which one?
Yeah, for my,
two best.
My D plus, and also then at the outset saying too, and we'll get to challenges too, that, NFIB has advocated for repeal from the get-go. But that said, I do think the individual marketplaces and the exchanges are now so ingrained and are something that are here to stay. Certainly we've seen, as I said before, now about at least 11 million, right? Correct me if I'm wrong, have gotten their coverage now through the individual marketplaces. And I know they got off to a rough start, particularly here in Maryland. But I think that's sad that, now there's just too many people that are depending on coverage through the individual marketplaces, the individual exchanges. So I think that's a component that will be here to stay.
Okay.
That's it.
Leonardo?
This is a tough one for me. I have a lot I could say. I think it's going to stay in place. I'll start there. I think the political consequences of undoing the Medicaid expansion at this point would be very significant. And I think that's difficult to imagine. I think the other thing that you have to appreciate is that a lot of these pieces are systemic, right? It's a very popular thing to say, we're going to repeal and replace it. We're going to keep the things we like no more pre-existing condition exclusions. You keep that, and you don't keep the individual mandate, and what you have is an insurance market full of people who are sick. And the cost spiral increases much more dramatically. So there are a lot of reasons why I think sensible people will realize it's not a good idea to do something big. I think, you know, surgical cutouts of pieces that people don't like is more feasible. That said, this is often an extremely partisan topic, and people sometimes do things that are not particularly smart and not particularly in their own interest. So the people who say repeal don't say when they're going to repeal, when they're going to replace it. They don't say what they're going to replace it with. So as a political issue, I operate on the assumption of the worst case scenario, that everything goes away. The other really important thing to say, you need to understand that the conversation about whether or not we repeal the Affordable Care Act and what happens to the Affordable Care Act is a great conversation to have. But the entire Affordable Care Act is built on a structure, which is the Medicaid program. It's built on the assumption that there is a Medicaid program taking care of the population of people who would not qualify for the exchanges. And Donald Trump's proposal is to block grant the Medicaid program, which would totally change the nature of the Medicaid program as we know it. It would dramatically decrease the amount of funding to states, and Medicaid as we know it would totally change. So the conversation about, well, what are we going to do about the Affordable Care Act, if you're removing the structure that the Affordable Care Act sits on, I'm not really sure that the Affordable Care Act conversation becomes the relevant conversation if you had a Trump presidency with a majority that was big enough to actually pass a block grant to Medicaid.
Thank you. And Beth Samus.
So when I think of it logically and from a policy perspective and as an ex-regulator, I can't imagine the Affordable Care Act being repealed or replaced. But when I think of it as a sociologist, and I look at the unbelievable political dialogue that we're having in this country, I fear for the worst. So I would not say that it is beyond the pale that if there was a Republican-controlled Congress and a Republican president, that logic would not be thrown out in favor of ideology and the turning back of an idea of shared responsibility and going back to this notion of who's the deserving poor in terms of coverage and who deserves subsidies within the middle class. And so I don't believe that that's going to happen, so I haven't slit my throat yet. But, you know, it's always a possibility.
Thank you. So I guess since Kimberly, you've touched on the challenges, I want to ask you all next, what do you think are the major challenges? I think we've touched on that, but this time actually, Beth Samus, can we start with you?
So I think that the challenge is really this problem of what has been partially solved by the Affordable Care Act, but not completely solved by the Affordable Care Act, which is the continued dysfunction of the individual market. And it's not surprising that the individual market would be dysfunctional. I don't know how many of you are familiar with how the health insurance, the commercial health insurance market is segmented, but it's probably worth, am I going to bore you if I tell you this?
No.
No? Okay. So, you know, there's the individual market, which is small. It's about 10% of the market by most people's estimation. That's the market that you go to if you are unfortunate enough to be over the age of 26 and not have a job, or to not be poor enough to qualify for Medicaid. But if you have a job where the employer is providing you with health care coverage, then you're either getting your insurance through the small group market, which is essentially those employers with 2 to 50 employees, fully insured. In other words, they're not assuming, the employer is not assuming any of the insurance risks themselves. They're transferring that over to an insurance company. That is a adjusted community rated market, just like it is in the individual market. Then there's the large group market, which is 51 to about 300 employees. And that, again, is a fully insured market. And now the market has moved away from community rating. So not everyone pays the same rate across all employer groups. In the small group market, all employers pay the same rate if they have exactly the same age distribution of employees. In the large group market, the price is now set based on the healthcare status of the employees. And then there's the self-funded market, which is really by far, in a way, probably about 50 to 60% of the commercial insurance market, where employers are pooling only their own employees and are basing that rate primarily on the experience of their group. Everyone, again, is being charged the same, but they're not being pooled with anyone outside of that employer's risk pool. The individual market, because it's been small and because it's really a residual market, most Americans get their coverage through their employer. Because it's really when you're not in an employment situation that you turn to that market, it's always been a mess. It's where, if you think about who it is who's not fully employed, it's either people who are 50 plus, who've been forced out of the labor market. And I have to tell you that when you get to be 50, you are going to have a healthcare condition. And there's something that's going to be wrong with you. And that means that if you were in a normal insurance market prior to the ACA, you would have been either uninsurable or definitely paid more. So we are asking young people who are not yet in established careers to essentially help to pay for the cost of this expensive, older, sicker population. And that's a problem. It would be a problem whether or not there was the Affordable Care Act or not. In my mind, the fact that Congress never fully funded the risk corridors and that the reinsurance program plus the risk corridor program were never seen as key components that would continue to be able to help to subsidize those sicker individuals and not rely solely on the financial wherewithal of younger people. That's what makes affordability a problem in the individual market, particularly for those 40 to 50% of the people in the individual market who don't qualify for a subsidy. So to me, when I think about fixing the Affordable Care Act, I don't know how it is that we don't at least start from the premise that the individual market was always broken, it remains broken, and fixing it requires a shared responsibility beyond those who are in that market to make it so that the premiums are affordable for everybody that we ask to purchase insurance.
Thank you. Okay, Kimberly.
So it's not always that the health insurance community and the advocacy community share an opinion on the policy, but the first thing on my list was actually stabilizing the insurance in the insurance market, the individual insurance market, and the way to do that was to reinvest in fully funding risk corridors and the risk pool, because as...
Can you say a little bit more about risk corridors, in case I'm not sure all the students may know what that is?
I'll do my best. This is not the part of the ACA policy on which I am personally the strongest, but fundamentally, as Beth was just talking about, that individual market having sort of laid that out, it is historically a transient market. It has always been a pressure point, and previously, it was medically underwritten, right? So you managed to get in because you knocked on the door and answered a questionnaire and you came back with a good health status, and they said, okay, you can come in now. We're going to take you because you're healthy, and then we'll pay for things once you get sick, but we're going to be able to collect this premium where you aren't costing us in terms of claiming behavior. And at least in Maryland, not across the country initially, but in Maryland, we have dealt with it a couple of different ways, but just pre-ACA through the creation of a high-risk pool where when you knocked on that door and you couldn't pass that health status review, you could go into the high-risk pool where you were joining a pool with other sick folks and who had higher costs and you paid a higher premium, but the state had created that safety net, right? So now we have combined both that population of healthier individuals who again are transient because they're coming in and out as employment-based insurance is coming in and out of their lives, and those same folks who now have some health status from the minor to the major that are increasing their costs and put them in this one risk pool together. Because they churn and because those health costs can be unpredictable, because it is now, in the scheme of health markets, the smaller market as opposed to your group market, the ACA attempted to provide some cost stabilization and some subsidy, unlike for the individuals themselves subsidizing their premium through the tax credits and giving them funds to help them, spare them from the out-of-pocket costs on the premium side. This is on the insurer side, providing subsidies that are designed to mitigate the fluctuation in cost, because in any given point, you may have a pool that's performing well, and suddenly too many people have a significant health episode, and now your whole pool is shifted, and you've gone to a much more expensive set of costs. So the idea of these various, they call them the 3 R's, risk adjustment, risk corridors, what was my third R? Reinsurance, thank you. These are all different approaches to mitigate that shifting cost in that market, but it was never fully realized. And so in terms of what happened in the individual market, it's been part of what I think we would argue as an industry has led to some of that instability in costs. There are other factors that have done that, but that's certainly one that's tied specifically to the ACA as opposed to outside of it. Looking at something on the group side that for the health insurance industry has not come into place but is a concern and a point of reform we would want to see is the health insurance tax. And the health insurance tax, sometimes in the media referred to as the Cadillac tax, is part of the ACA and is going to kick in for employer plans that says that there is a threshold created under the law, and for anyone who happens to be in a situation where your employer is providing a richer plan, where the value of your plan exceeds about $27,500 in terms of what the value of the plan is, for every dollar over that, the tax is 40%. And that is going to create a significant increase in cost for those in employer plans. And it was set to come into existence. Congress, in a bipartisan way, one of the few things they've done, in a bipartisan move under the ACA, has delayed the implementation. They didn't repeal it, but they delayed the implementation of the health insurance tax. It's something that's been heavily lobbied against by the insurance industry, just because we do know cost is an issue both in the individual market, but as you heard from NFIB, in the small group and even in the insured large group market, this is a place that you're going to feel that cost pressure again that's derived from the act. So again, I wouldn't repeal the ACA, but I think surgically going in and fixing things is exactly what it needs.
Great. Beth?
So
Challenges.
So I'll start out, again, focusing on the affordability, but going back to what I talked about before, that in my opinion, the Affordable Care Act has not accomplished its goal of making health care more affordable. So we've heard a lot, from Kim, and that was very nice, why the insurance market, the costs continue to rise and things you can do. But again, kind of the bigger picture, ultimately the healthcare itself needs to be examined, and reforms need to be made there. And I think you were probably right, Kim, at the outset when you said this was really more of an insurance reform law. It was not a healthcare reform law, but really was more of an insurance reform law. And so whether or not that's possible under the current, confines, if you will, of the ACA, I don't know. But that is something that, even I have a quote here from President Obama, acknowledged that despite inroads, the Affordable Care Act has clearly made improving, it has made inroads in improving access to health care. But for millions of people, rising health care costs remain a huge problem in this country. So whether you have insurance or not, insurance, again, is just, as health care is more expensive, and health insurance is going to be more expensive. And there are still folks out there that are paying out of pocket. We have members that are not insured that are still paying out of pocket because they kind of fall, in or, by choice, they opt. It's cheaper in some instances to pay the penalty for the individual mandate than it is to, in some areas of the country, than to go through the individual market. So they're paying for healthcare costs out of pocket there. But with regards to the small group market, I would just say that, it's certainly NFIB's hope that there is more attention paid to the small group market. I know Beth talked about the dysfunction of the individual market, but I would say the small group market is very dysfunctional, as evidenced by the failure of the shop. There's just not attention paid to the small group market. And these are, employers with, on average, under 50 employees. Since 2008, the offer rate for small businesses with fewer than 50 employees has really dropped dramatically, over 10 percentage points. I was telling Leo that when I started NFIB, nearly 50% of small employers, small employers, again, under 50 employees, the offer rate was close to 50%. It's now at 29%. So for employers with under 50 employees, only about 29% offer health coverage. The reason they don't, again, it's the affordability. Health insurance is too expensive. They can't afford to offer it. Why can't they afford? Well, in part because policies in the small group market are very expensive. You've got a smaller pool, and it's more expensive. So that is something, certainly, NFIB is advocating too for repeal of the Cadillac tax, most definitely, because for employers that do offer, again, it's going to impact even the small group market, most definitely. We would like to see employers to be able to offer standalone health reimbursement accounts. So for employees, particularly for the small employers with under 10 employees, under 5 employees, to be able to provide their employees reimbursement for policies that they buy on the individual market, tax-free reimbursement. So equity with larger employers is something that we would also like to see there. I just think there's a lot that can be done to improve the small group market that would really help small employers and employees at small businesses.
Thank you. Leo, I'm going to give you the last word, and then we can open it up for questions from the audience.
That's great power. So, we had very different, very different grades, but I think on this challenge question, you're hearing cost, and you're going to hear cost again. Cost is kind of where it's at. I want to kind of pull together what we've heard as I think about it. You're hearing cost, but make sure you're separating out kind of how these are really different cost issues. One of the issues you're hearing about, right, is the question of the sustainability of this exchange we've built. And your basic problem is that the people who are really healthy are not represented very much in the exchange, and the people who are less healthy are more often there, and that causes rapid price increase and fluctuation in cost, and if uncontrolled for a long time, could cause the exchange to implode, right? So that's your cost concern on the exchange side. I think people will vary as to whether they think the sky is falling down or not, but that's the issue. Related to that, but a separate issue, is the question of what is the cost to me as the individual consumer using this? Remember, 80%, roughly 80% of the people in the exchange are getting a subsidy to be there, right? So is that subsidy charging them 2% of their income, 5% of their income, 15% of their income? That is what people mean, individuals mean, my clients mean when they say cost, right? And of course, that relates to the first issue, because if that subsidy is not generous enough, the first people to drop out are going to be the people who say, I'm kind of healthy, so why am I going to pay 12% of my income for this, right? So one of the challenges is that I think the subsidy thresholds are just too low. So there are a lot of healthy people who might be in if the subsidy was a little more generous. Third cost bucket is a really different one, right? Which is the theme that Elizabeth just made, which is the overall healthcare cost question, right? How much does the Hep C medication cost per month? And if it's $15,000 a month, it really doesn't matter how you design the system, you're going to run into some cost issues, right? Now, nobody who wrote the Affordable Care Act or supported the Affordable Care Act thought the Affordable Care Act was going to change the fact that healthcare costs go up every year. The hope was that it would slow the growth, right? The annoying phrase was bend the cost curve. So the data actually supports that the cost curve is bending. In the decade prior to the Affordable Care Act, the average growth was 5 to 7%. Since then, it's more about an average of 3%. Now, the question is whether that's related to the economy, because there are many people who think that because the economy slowed down, that's the reason that the cost growth slowed down. So we don't really know. I would say it's much broader than the ACA in terms of the ongoing healthcare costs that have been growing, as we've known, as we've all described here, for the last 50 years. So I don't really see the ACA as an accelerator of that. If there's any evidence, it's that the ACA has helped to slow it down, if there's any evidence. And the final point to make is a really important point that Beth made, which is that the Affordable Care Act does attempt to take on the cost issue through the innovative programs. We could talk about what those innovative programs look like, but if you talk to some policy expert about how to control cost, there are kind of two directions they go. There are the people who go the kind of single payer direction, and there are the people who say, within our current system, how do we save cost? Through new innovative payment and delivery system mechanisms, and that's why the ACA is 900 pages long.
Well, thank you, panelists. As I said, I would love to open it up now to the audience. I appreciated, Leo, that you mentioned the cost of the Hep C drug, because there are a number of students here from a food and drug law class, so that might be of interest to them. But yeah, so questions, yes?
I was wondering, would it be possible to hold on to the ACA and get rid of employer-based healthcare? Because it seems like a lot of the problems we're talking about come out of the sort of model that most people get insurance from their employer. So would it be possible to eliminate that and still sort of keep the other parts of the ACA, or would it be something that would completely destroy the entire system?
Well, of course, you could do that. I mean, I think, you know, people in America have been debating whether or not there should be a single-payer system for forever. You know, every time I talk to anybody in my family about insurance, first of all, their eyes glaze over when I start to talk about insurance. And second of all, when I talk to them specifically about health insurance, uniformly, the answer is no one could have designed such a complicated system. And clearly, having all these risk pools and the segmentation that goes on in them, and not having, you know, sort of a general shared responsibility notion for health insurance makes things more complicated. There are different payment arrangements in the private insurance market that there are in Medicare and Medicaid, although Medicare definitely is the 1,000-pound gorilla and sort of shapes how everything's done. So if you were if you had a clean slate and you could redesign it, and you weren't working for the health insurance industry so that your livelihood was not dependent upon it, you would probably come up with something closer to a single-payer system, or maybe something like the German guilds. But we are where we are. And it's hard to see, you know, if we're seriously contemplating doing away with a Cadillac tax, which allows large employers to give more benefits to their employees, to essentially not have a uniform set of incentives for all consumers, whether they're in the individual market or the small or large or self-funded market, that's craziness. Right? That's what that tax was designed to do, was again to try to establish a uniform set of benefits and incentives. And yet, it's just very hard for us as a country to talk about shared responsibility. And so, although my heart would love to see more of a single payer, I don't see it happening. The only place where I see it could possibly work is this notion of a public option in the individual market. Again, because each individual market in each state is so small that it actually makes some sense to have a national risk pool for the individual market to try to address sort of this problem of just the very sick and the healthiest.
Sorry, I want to clarify. I want to ask if that was possible, but not go single payer.
Right.
So have a private market, but eliminate the sort of the employer-based model.
No.
And, right, right. And I heard your question, and I knew she hadn't quite gotten to the heart of your question. And yeah, I'm going to echo that. No. I think the challenge in trying to take that approach, right, and say we're going to stay in a private market space, but undo the group market and turn it all into everybody has an individual policy. One, just from a political expediency, the fact that the majority of Americans are in a group policy makes that as seismic a shift in what their experience with their insurance is going to feel and look like to try to convince people to want to go that route, for one. And two, you do have the challenge of what exactly does that look like, and how does that make sense even for the private market to want to administer that instead of just saying, what, we give up, we're going to pack it up and go home and let it just be single payer, given the administrative efficiencies that you lose. And now I've got to treat everybody with a different policy, and exactly what am I going to be competing on from business to business from a competitive marketplace perspective. I don't think that the industry would find that the attractive route to go.
The money is in the group market, not in the individual market.
Absolutely.
And so insurance companies, I don't think would be happy with that.
Yeah, I think you also have to rope into that the issue of, from an employer's point of view, right? This is something that you can offer an employee because you can negotiate something for them better than they can negotiate for themselves if they go out there on that market on their own. From the employee's point of view, that employer can get you something that you can't quite get on the individual market. And politically, it's really complex because on the left is actually very fractured on these types of issues because the history of unions is that they fought very hard to get benefits for their people. So, when they go and give their stump speech, like one of the first 2 or 3 things they say is, we're the ones who got you this amazing health package through the union, through the employer. So it's actually really challenging. I do think, to take your question and go the direction where I think it can go, is, and we talked a little bit about this before, I think it's kind of absurd that a 9-person shop employer has to deal with the administrative hassle of working out insurance for their employees. That makes no sense to me, right? If it's a law firm that has 5,000 employees and is, swimming in dollars, sure, it makes some sense. So, I do think they're probably, the system should be thought about in a way that we start taking the onus off small to medium-sized business and think more about de-linking from employer in those markets, or at least making the default be it's going to work well on the individual market for all of those employees. And if the employer wants to override that and step up and do something on behalf of the employees, great. But it doesn't make sense to me when you start talking about larger employers.
Other questions? Karen.
I wanted to ask you about competition in healthcare and what we see happening, all these attempts in some of these states to try to have some competition plans that are just failing. And why is that? And what possible solutions could there be for an evergreen, for example, in our state?
Competition in the health insurance market.
And the impact of the ACA is
So let's start with Evergreen and co-ops generally. They were a creature created through the ACA. They were seen as this great opportunity to bring some consumer-focused reform to the individual insurance market. But at the same time, they came with their own set of rules and constraints that I think they found it very hard, not only given, I think, that set of rules, but also they're all startup insurers at that point trying to compete with established insurers. And I don't think that there was anything that was ever going to be easy about that for a brand new company coming into a single state market space focused specifically on the individual market. And so we have seen them failing across the country. Maryland's own co-op is struggling right now to figure out what its future is going to look like. Maryland, as the state that I know the best, has not been considered, the most competitive marketplace, and it's changed over the years, not necessarily triggered by the ACA. We've had consolidation occurring in our market for years before the ACA came to be, and in fact, I think the last companies to merge in the Maryland market space actually occurred prior to the passage of the ACA, or very, very early before it was fully implemented. So it's not as though that has driven that consolidation, although we've got other national companies looking at those kinds of mergers. But the individual market remains a challenging place. We have challenges from companies' perspective about balancing regulation and profitability. And as I think Beth said earlier, the money is in the group market. It just simply is. The individual market is such a small space. I don't think you will find large employers who are at a lack for companies vying for their business. It is in that small group market and that individual market that are just naturally smaller and therefore more cost sensitive and more competitive and regulated now both through some level of federal regulation through the ACA and at the state level in a way that self-funded plans are not, changing that regulatory burden that change how companies feel about where they're going to do business. And for that reason, we've seen one of our writers who was in the individual market in Maryland not come into the exchange initially, and we've had one who's now since left. And now we're sort of waiting with bated breath to see if the co-op is going to make it, and what happens if that doesn't happen. That leaves us with 3 writers left in the individual market at that time. So there's definitely been change over time. There's often a conversation about what is a competitive health insurance market and which states have them and which states don't. And I don't know that I personally believe there's sort of this magic bullet for why one state's market is so much more competitive than another, other than looking back over its history as to who those companies were, whether they were affected by consolidation. Some states just managed to avoid that, but not because they did anything that sort of magically protected them from it. They just didn't have the right carriers coming together the way we have here. And carriers, again, have their own opinions about the regulatory space in which they want to operate and what those market rules, because even under the ACA, where there has been some uniformity, that is a place where things do vary from state to state. And that has shaped, for some carriers, which states they were in initially and which states they chose to pull out of first.
Can I just interrupt before you answer? So I know that Professor Palumbo's class wanted to return to the classroom at some point. So I don't know if you have any more time or you want to. You can be excused. And thank you for coming. Thank you. So I'm sorry, Beth, go ahead.
So I guess I have a slightly different take on it, having thought about the whole individual market, maybe more than one person should ever think about. And that largely has to do with the fact that prior to the Affordable Care Act, we had what looked like competition. And what I mean by that is that we had Kaiser and we had Care First or the other Blues plans and some other companies that mimic Kaiser, like Group Health out in Puget Sound, where they were dedicated to providing comprehensive set of benefits in the individual market. And then we had these slew of companies, these insurance companies, who would sell what are thought of as mini-med policies, stripped down policies. Maybe they were doing it just for a short period of time between when someone's a student and they go to work. And then also there was the ability to be able to compete on how you how you got risk. So the Blues plans and Kaiser typically did community rating, typically were seen as the insurers of last resort, and many people flocked to them. And other insurance companies would come and pick, one that I used to work for, would pick around the edges by having pretty innovative ways of keeping people off policies. And so I don't know that I think of that as really competition. What we have now is more what I would think of from an economic standpoint as competition. There's a uniform set of rules. There's a uniform way in which companies have to operate, and either they can do it or they can't do it. And you know, the largest commercial insurers have never been committed to the individual market. And if we want to keep competition in the individual market, I don't know that I believe it's that important, but many people seem to think that it's important. If you think that it's important, then again, it has to do with changing the rules to offset the cost so that these companies can make more money when they insure those who are sick.
And I think as the rules have changed, to Beth's point, once you now, for better or worse, I think in a lot of ways better, that's probably me speaking personally more so than wearing my professional hat, but you know, change some of those rules. You did start in a place where in Maryland, specifically, Kaiser and Care First were the strongest names in the individual market. So now you are you're competing more on brand, you're competing more on price, and for a small market share company in the individual market, which is already a small market, that does make that a lot harder to compete with a Care First, who had upwards of nearly 90% of the individual market when we started. They've actually lost market share since the exchange has come online, and that people are now shopping for individual insurance the way they're shopping, you know, through the exchange, and then apples to apples, and being able to see, you know, all the bronze plans or all the gold plans side by side has actually eroded their presence in the individual market. I mean, eroded is like 85%, but it's not what it was when it was, you know, peaking at 92% of the individual market. But I think Kaiser, for instance, as another one more committed to the individual market, is experiencing more growth than some of the others who've been in that space. And so I think those are all those different factors.
Did you want to add anything on competition?
I would just add in too, I think there was some, you know, initially too, was all called, for lack of a better term, kind of the startups, if you will, that, you know, as Kim said, it made it more difficult. There was, you know, political reality set in too with regards to some things like the delay of the essential health benefits. So kind of the mandate thing. So it was, you know, I'm not going to, you get to keep your plan. And then of course, plans were canceling, plans were being dropped, so they came in and they delayed the essential health benefits. So you still had kind of grandfathered plans in. So some people that would have been shopping weren't shopping initially because they were able to keep their plan, and kind of plans that didn't comply, if you will, with the new mandates there. So I think that was part of it too, and you know, it just made competition for, you know, a new kid on the block very difficult.
I would just add that it's very hard to imagine that the market was, in less than 3 cycles, going to get to a place of stable competition. And when I have the anecdotal feedback I get when I talk to plan people is they say, listen, this population looks a little different than we all predicted it would look. And in particular, they tend to say, it looks a little bit more like our Medicaid line than it does anything else. And therefore, if you happen to be somebody who had good Medicaid line experience, you tend to be better prepared for it. And there are other people who you would have thought, you know, have a lot of experience in the insurance game, but they weren't as prepared. And I think that, you know, the analogy for if you like my analogy on this is, if you have a city that has a law against food trucks and you open up that law, right, everybody and their mother goes out and gets a food truck, and you know within a year, half of them are going to be out of business, right? And that's kind of what happened here.
Yeah, that's a good point.
And in the back, you have had a question. Yes.
Yes. My name is Heidi Thomas. I'm a rising 2L at Howard University School of Law. And my question is concerning Medicare, right? So the expansion of Medicare under the ACA, in my opinion, provides better coverage for the elderly in ensuring that they remain healthy, right? And decrease, essentially, the impacts that their health could have on the healthcare system. And so In researching the ACA, a concern for me is consumer protection and how the business of insurance hasn't been regulated by the federal government until the Affordable Care Act, right? Under the McCarran-Ferguson Act, the federal government hasn't been able to regulate advertising practices as it pertains to consumers. And so my position is that the Medicare expansion is beneficial to not only the increasing number of baby boomers that are going to have an impact on the healthcare system, but also the younger generation who has to pay into healthcare and health insurance. And so my question for you is, what sort of consumer protections do you think that we could advocate for as it pertains to those individuals who are covered under Medicare, who would benefit from being a part of the Medicare system, the wellness programs, ensuring that they're healthy, ensuring that they have the rehabilitative programs that are offered under the Medicare expansion, excuse me, the checkups that are offered under the Medicare expansion. How can we protect those consumers and prevent them from being kind of preyed upon by insurance companies and convinced? I mean, it happened to my grandmother, right? So this is a prompt for my journal comment because she was on Medicare. She was contacted by Blue Cross Blue Shield, excuse me, and convinced to supplement her Medicare coverage with what they were offering. Mm-hmm. However, unfortunately, it was significantly less coverage for an increase in price, right? An increase in premium. And so I'm under the personal belief that there should be some consumer protection, if not for everybody who's participating in this mandate for health insurance, but at least for this particular group of people who qualify for Medicare and essentially have a great impact on the healthcare system. And so my question again is, what do you see as consumer protection regulation that could actually be effective for that elderly group that qualify for Medicare?
Leo, do you want to take a
Sure,
shot?
I can start. So you brought out a few themes there, and let me try and hit some of them. So one of the underlying themes is that if your grandmother needs supplemental coverage, right, in Medicare, it's a result of the fact that Medicare is now way out of date in terms of its cost structure. Mm-hmm. So we just, the people on Medicaid have a relatively good cost structure. We just created a relatively good cost structure in the exchange, and we haven't really focused on Medicare because that was sort of already there. But the Medicare costs are very, very problematic for older adults who have fixed incomes. And we could go into the cost structure, but the bottom line is you are worse off in Medicare than a lot of other places, and that doesn't make any sense. So that contributes to then this whole world of both supplemental plans, but also seniors shopping for solutions to things. So that's our first issue. Second issue is the Medicare space has undergone phenomenal transition since the Bush administration. Medicare 10 years ago was a very fee-for-service driven program, so there weren't a lot of insurance companies in the mix. The growth of insurance companies in Medicare has been very rapid, and this is a challenge that comes with. There are people who believe that privatizing Medicare in this way is a good thing, and one of the challenges that comes with it is how do you oversee this? We have often pushed CMS to take more of an active role in the rollout of, for example, notices, in staffing CMS-based call centers where people can call in. But this raises a real challenge, right? Because if you have a managed care plan that has all of the information about a consumer, right, they are in the best position to actually provide information to that consumer. But of course, their information may not be totally unbiased. And that's just a reality. I want to be clear, the same thing happens on the other side. The typical example is, my hospital that I use is Hospital X. They break their contract with the managed care company. The managed care plan sends me a letter saying there's another hospital in the network, and the hospital sends me a letter saying there's another managed care plan we work with, right? So it's not just the managed care plans that are doing this. And there isn't always a source of neutral information. And we have pushed CMS to do a better job on templates for the communications with people so that they're structured in a way that is fair. So I was a part of reviewing plan letters to consumers that the second option, the other option that was not the one the plan wanted you to pick, was on page 5 of the letter, right? So you send that to somebody and they're never going to get to it. That needs to be its template that CMS gives the plan and the plan populates, right? So there is a lot of room to improve that structure through templates, through 1-800-Medicare and state SHIP programs with our assistance programs having more functionalities and more systemic collection of what's going on.
Well, I want to thank the panelists very much for a wonderful, very interesting panel presentation. And I hope they will join us and you will all join us outside for some food and drink and continued conversation. Thank you.